Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's not only a TGIF, folks. It is it for 2018 for trading. So we get a. This is a great card to read for this day. Always do your best. Surrender and let go of the past. Whatever life takes away from you, let it go. When you surrender and let go of the past, you allow yourself to be fully alive in the moment. Letting go of the past means you can enjoy the dream that is happening right here, right now. Yesterday's gone. Tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it out here. We have the Dow Industrials down 28. NASDAQ off 22, S&P's down 2. Gold contract trading up $8.10 at $13.05. Silver up 7 cents, $16.99. Let's jump right over to those markets because I suspect what we have here, folks, we are kicking into a nice commodity market out here, and it's going to be all about the dollar. But as we're bisecting and dissecting this, we're going to start with gold. So we go take a look at gold. Gold bottomed on the 12th of December, 1238. Right now, you're at 1305. I want to show you something inside the gold market because this is good. This is pretty cool watching how this whole thing shakes out on a much longer-term basis. Since it's the end of the trading year, we might as well pull this back a little and see where we're at. So, gold contract. We go back to December of 2015. Gold laid out there at a low, 1,046. What does it do? This was an extraordinary run, too, by the way. Okay, this was one of the best runs that we had since 2003. Gold took off at 1,046, went nonstop, going up into July to 1,377. Big number, okay? July, it topped out in July, comes back down, and what does it do? It bottoms again in December. Last year, it was the week of December 15th. You bottomed out at 1123. We take off, we top out this year, September. September 8th, you go to 1358. The intriguing part here, folks, is that what you have, now we have a low established at 1236. You came off that low, you have volume. It's going to make the run for the 1358. The real challenge is going to be, can it get up and over the 1377? And we're going to find out. Right now, we've had a good week. It's been moving forward, wide price spread, accelerated volume, all of the above. If we go over and we take a look at the GDX, what happened with the GDX, we're going to do the same thing. We'll go back a couple years with the GDX so you can see how this also performed. GDX, if we go back to 2015, 2016 rather, December 2016, you're trading at $12.40. That run went from $12.40 straight up to 31. Topped out in August, came back down, made another low in December of 2016 at 1858. That ran to 25 bucks, and then we've been consolidating since that point. So the cool thing here is this, is that we've been consolidating basically all year. When you do a consolidation, if you come off a consolidation, you have the volume, that's building cause, and the way that this market has set up, this would be cause building for higher price. The reason I'm saying that is that these lower swing points never came back down to this December swing point. So it looks to me that what we're going to have in that market is that not only the gold market either, folks, it looks to me that commodities in general are going to run. And I'll go back to, it starts at the copper market, because the copper market started running about 6 months ago. We go up and we take a look at the silver market. What do we have with silver? Silver right now is trading at $17.01. What we have with silver, silver came off that low in December also, $15.63. The silver market, even in holiday trading, good volume out here today. We've done 68,000 contracts. We're trading 17 bucks. Silver wants to make this run up to the 1836 area. So good number. Now, King Dollar. If we go over to King Dollar, what you're going to see is this. And metals, commodities, always about King Dollar. So King Dollar right now, it's down 390 ticks. It broke out a swing point today. The swing point we broke out was the lows of the 27th of November. Your major swing is down here that was established on September 8th. That major swing is 90.990. When we take this back and we put this on a continuous contract, what you're going to see is that the good old king dollar is at a very dangerous spot right now. What it is this. The dollar has been in a consolidation since January of 2015. Now, the lows of this consolidation in the dollar are approximately 92 and 90.990 is the low. Well, that's only 1,000 ticks away, which is a penny. Bottom line, I expect you're going to go after it. You break that, and you are going to be down into the 82 mark, and you're going to be there very quickly. Because when you take a look at this at a 4-year chart, you can see that there's nothing stopping it. But you have to bring it back further, and the reason you're going to bring it back further, because where it should get some support is the highs of 2008, as well as the highs of 2010. Now, those highs are 88. This is what the difference is. The differential comes down to the A to B point is a very large one. If we break it with volume, guess what? Your probability is much higher. You're going to go to 82. You know, we'll see how it shakes out. But you can see, now let's go to the interest rate structure. So fundamentally, interest rates going up means you'd have a stronger currency. Well, the note and bond market, folks, have been taking people out in stretches for a long period of time when they were selling this, meaning that thinking that rates are going to go up. This is the largest bull market, started in January 3rd of 1981, and we are going into January 2nd of 2018, okay? And guess what? 10-year, you're at 124 flat right now. That rejected lower price, let's say it's going to make a run again for 125 to 127. We take a look at the actual yields. Yields out here today, 2.4. 2.4 is at the higher end for the full year. The low end for the last 12 months is 2.0. The high end is 2.6. Bottom line, though, the way the market's trading, the way they're buying notes and buying bonds, are saying that interest rates are not going to be going up as most of us think or as quick as we think. You stay right there, folks. We'll come right back. Dow Industrial's down 24, Nasdaq's off 20, S&P's off 1.5.